Hi there, welcome to Wyckoff Technical Analysis session for Hedera. Hedera has been struggling to stay above the red key level of this 70 cents 50, so this over here. And currently it's a very key level over there because if it fails, the price may drop all the way to the top of the long-term playground zone, and that's something huge. If you're new to my sessions, these three things are the key takeaways you'll find from my live sessions, both Wyckoff stages in the weekly and daily time frame, current and like coming stages, and also key price levels where we find or the price find resistance or support, and also any breakout timing the charts are telling us. So in the weekly chart here, we previously talked about this uptrend or like downtrend resistance line basically. So it cuts across this blue box, this uptrend channel, which is pretty much finished, especially after what happened last week that fell through way deeper than the bottom of the upward channel. And this white dashed line is still in effect. More than that, this yellow intermediate level that extends from the sign of weakness continues to play a role if we look at current candlestick of this week that got rejected from that yellow line. So you can see this line from my previous session, so this is not something new that I have drawn. So we'll come back to that 20% drop at a later time, but here's what it is. This, previously we talked about, there's a 60% chance for the sign of weakness to reappear, and it's definitely heading towards that direction. So this level, somewhere near the ceiling of this long-term playground zone, was when mid-June and also early April came down to test. And if we look at what happened back in 2022 and all the way to late 2024, the price was trading within this long-term playground zone for those over 2 years, basically around 2 years and a half. So if this time the price comes down to test this white line, like if not careful, like the bulls are really not able to defend it, the worst case scenario could be we fall back into this long-term playground zone and trade for I don't know how long, but probably at least a year. That's what happened back in 2019 all the way into late 2020. Hey, rejuvenated. I'll cover Casper today as well. It'll be like right after this Polkadot Algo, and then eventually that will be Casper. Thanks for your support. So back to here, Hedera. So this is still the next stage of Wyckoff, where now it's looks to me it's more like 70%, while going back for a second test drops to 30. So even if it really climbs back, remember we talked about this resistance line, the second resistance, and then multiple key levels, plus this bottom edge of the uptrend channel box that was previously in effect will essentially block or defer the climb of the price. So the best case scenario would be something like that, but that means it goes all the way to March 2026. But let's focus on this one now, because the downside risk is absolutely bigger than the upside. And if we turn on the Bollinger Band curve in a squeeze, currently we are not in a squeeze. The previous squeeze has led to this big wave. So normally the way it happens is the wave size will get smaller and smaller and smaller, but depending on whether like which side it's going, it can go smaller and smaller heading downwards, but the swing isn't over yet, so be really careful that was just some random drawing that I put in just now. So the wave can go like this as well. So that's the big picture. And the 20% that I talk about is counting from where we are now all the way to the ceiling. That's around 23%. So if the bulls aren't successful in defending this line, when we get to the daily chart, we'll see clearer what's happening, what's going on. It's not that they failed already, they're still doing their work. Like more importantly, after that 20 to 23%, if this is really the end of the accumulation cycle, there may be a little bit of bounce and eventually comes down for a selling climax. Then from that point, I mean from the current price point all the way to maybe the center line of this long-term playground zone, that's a 50% drop. So if you are into Fibonacci principles, coincidentally, that's like one of the benchmark percentage. Likewise to the bottom, that's 75% almost. So, daily chart. Bollinger Band Current Squeeze. That outlier event triggered the squeeze eventually. Well, one day before that, it was already in a squeeze situation. So what is happening now is that outlier Friday kind of pushed forward the release of the squeeze force, but then the wave would be very skewed because of what happened over there. So expect more like drastic price actions to come. More importantly, in this daily chart, after seeing what has happened, I would adjust what we have put in previously. Instead of two mini cycles, I believe it's more appropriate to just get rid of these. That's always mentioned. That's the tricky part of doing Wyckoff in the daily chart, because Wyckoff isn't meant to be like drawn on this kind of frequent or like lower level time frame. The big guys basically work on higher level time frames. What I'm trying to change here is basically there are multiple. I'll consider this entire patch just the same distribution cycle. So there, these four sign of weaknesses, they were at this higher level at around 23 cents, and eventually we've got lower level of sign of weaknesses right around the orange key level of 210, like 21 cents. So that's what has happened. So the chart now looks a lot more clear. And looking at what's happening right now, discounting the outlier event, let's treat as if the price came down like this. So it's basically a leg towards the sign of the selling climax, but it's not there yet. The selling climax back in April and June were both around this white line, and if that's the case, let's say this we said is 70% chance in the weekly chart. So this is not a sign of strength now after we updated the chart. Well, it's tricky. It's not even second test. Let's assume that's second test. So we've got like a second test right there and then an upthrust already. So let's say if it really does come up to retest the green line, I'll give it 30% aligning to what's in the weekly chart. So here it's still heading towards this selling climax, and looking at here, that's where it is heading. And so what's going on here, and I said the bulls hasn't failed yet, is because like Saturday, Sunday, Monday, the bulls regained strength just to get rejected from this intermediate resistance level that was drawn from the sign of strength, as well as the automatic reaction from an earlier distribution cycle this year, around middle of this year. So now it is coming down seemingly for another accumulation. So the period we are going through may be the preliminary support period. It looks like it is. If it comes further down, then we will have that confirmation when the selling climax eventually happens. So that's where it is now. But then if the bulls really succeed in reclaiming like above the red key level, then continue to trade sideways underneath this yellow dashed line, eventually it will enter this triangle. So this triangle over here is formed by these previous peaks. So from all the way from the upthrust down to LPSYs, then the time point it's pointing at is around mid-December. So it's about just 7 weeks from now. When that happens, that's a breakout point, meaning either it breaks above that resistance and maybe challenge the second test level. Like I've drawn in the weekly chart, it may get like suppressed by the bottom edge of the previous upward channel, but then that's how it can edge upwards. That's only one scenario. The other scenario is for it to break really solidly below the red key level. So that's 17 cents 50. And come down to test the white line at around 13 cents. So that's the time point that we have. But if it really comes down before that, like in the next few days, then that's not something we have to worry about. Rather, whether it's going to rebound much like what happened back in April and June. And given the economic uncertainty right now, the only hope as of this moment is for interest rates to come down, and then people may treat that as a positive news or booster to get some forces to rebound upwards. Other than that, there's not much positives going on. And I think that's for the daily chart. And just to recap, higher downside risk, and we are expecting another test to the sign of weakness level. At the same time, it's the ceiling of the long-term playground zone. So be careful the coming drop. If it really happens, it's not going to be something small. Thanks for joining me.